Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, July 13th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought, let's take a look at the week that was. As we looked at our economic news this week, there was not a whole lot that took place on Monday, not a whole lot that took place on Tuesday. Big news on Wednesday was the FOMC minutes came out, and not very well received as the market took a bit of a plunge on the news. Thursday, which was yesterday, we say jobless claims came out, better than expected. Import-export prices were just fine. And as we look at Friday, we see that we have a couple of things that can absolutely move the market. As we look at PPI, Producer Price Index, and as we look at consumer sentiment, which takes place just before that 10 o'clock hour. So as far as economic announcements, we've got some left this week, and they will be taking place tomorrow morning and certainly can move the market. All right, let's see what the market's done so far this week. Let's first of all look at our overall trend. We may have had a head fake right here, as we saw the market pop up above our previous trading range. However, it has not stayed up there, and it remains to be seen whether or not we actually did establish an uptrend. It appears that we got higher highs, higher lows. If we look at the blues, higher, high, high. So the highs go higher and higher. All right. And if we look at our lows, here's a low, a higher low, and we're so far looking at a higher low here, but we'll see what happens. It looks like we have a reversal signal so far today, which took place on Thursday. But remember, this doesn't mean anything until it's confirmed with a higher high and a higher low. And until we get that, we are still in a down cycle, in a upward trending market with the breakout, and we'll see how far down we're going to retreat. At this point, we're still in transition. We are in a down cycle waiting for a bounce, and we'll get a bounce. So far, it looks like a normal cyclical market. Looks kind of the way we expect markets to look, reacting the way we expect markets to look. And so we'll see what happens. Are we going to come down here and continue with our down cycle, getting lower lows, lower highs, till we come down to potentially this diagonal, potentially down here to the 200-day moving average. This is the 30-day moving average, the 50-day moving average, heading for a crossover on that 50 and 30, as we had a bit of a pop-up here. But we don't have that crossover yet, and we're still in the classic down, heading in our downtrend as far as the moving averages are concerned. But so far, we seem that this summer we're in a trading range that extends from there to there, and it's to be determined whether this was a head fake or whether it was the beginning of a new uptrend. And we'll see Friday, as we'll get more information as we look at our real-time indicators. Those are candlesticks. They're the ones that give us a real-time indicator. It's not a lagging indicator like so many of our other ones. If we look at the first 4 days of the week, we see that during the first 4 days we've done nothing but go down, and we are in a down cycle. There's 1, 2, 3, 4, 5, 6 days in a row SPX has been going down. And we see that we're sitting on this diagonal, which I drew in earlier. And so we'll see whether we bounce from this point or whether we continue down. What's causing all this? Well, at the last Fed meeting there was some expectations of a new QE3, and we found out that there was no QE3 announced. All that was announced was they were going to continue to sell short-term bonds and buy longer-term bonds to keep the interest rates basically where they were at. So that didn't change, and that was disappointment of that news in the market, and we see that we had our technical bounce and then started heading down. Now, we've got recession in Europe, we've got recession in Asia, China looks like it's slowing down, and the real question is the U.S. going to go into a recession also? That is our macroeconomic view as to what's going on in the financial world at this particular point, and that was what's causing some of the delay we've had this summer as we're trading in a lower trading range this summer. And this is actually quite typical of some of the cycles that we run through during the summer months. Let's take a look at the Dow and see what the Dow did during the first 4 days of the week, and we see that the Dow looks very much like the S&P, and we see that we are in a down cycle. No confirmation of a pivot or a reversal taking place yet, as we're getting lower highs and lower lows, and we've had quite a few days in a row that we're headed down. NASDAQ will look very much the same, only a little more emphasis on the NASDAQ, as we see for the previous 4 days. Definitely in a down cycle. All right, and we see that we did have a breakout from our previous high. So that too gave us what either is a head fake or the beginning of a new uptrend. And we see also here that we had a doji today in the NASDAQ, which basically says we have some kind of indecision as to what's going on. Again, we'll have an influence on what are we going to see tomorrow. Are we going to see higher highs and higher lows, or are we going to see lower highs, lower lows, headed for that 200-day moving average? There seems to be some weakness in the market. I wouldn't be a bit surprised to see us head for that 200-day moving average. We can look at the first 30 minutes of the market tomorrow, look at the high and low for that 30 minutes, and get an indication of where you think the market is heading. All right, nice little rebound today in the market as the market headed back up. VIX is doing exactly what we expect it to do. It's going opposite the way of the market. As the market goes down, the VIX will tend to go up as there becomes more and more fear in the market. But notice we're still trading in this area between 20 and 15, where the VIX basically spends about 85% of its time. All right, after looking at the VIX, we'll next take a look at the ETF for bonds, the TLT, and as we look at it, as the market has come down, no big surprise, money flowed into bonds. As the market starts to expand and head to the top side, we'll see this pull back some, but notice we really are in a pretty tight trading range with the bonds as we see them climbing in this range right here. We'll see if we get a breakout out of the bonds or whether we're going to continue to trade in this range. For quite a while we traded in even a tighter range right through there. So the bonds certainly have been healthy. Who would ever think that they would outperform the stock market? But it certainly can happen, as we have seen. The financials, if we look at the financials, trading within our yellow zone, although it seems like that zone's getting tighter and tighter as we see that we have pulled back with the overall market, and that's what we expect the financials. Looking at the XLF Spider Select sector, it tells us what the financials are doing relative to the overall market. Looks very much like our indices. Next, we're going to take a look at oil and see that oil actually has gone basically nowhere in the 4 days of this week. And so it's just been going sideways. We look at the ETF USO for this, and it certainly provides for us many times some opportunities to pull some money out of the market, utilizing that as our exchange traded fund for oil. All right, next what we'll take a look at is gold, and we see that gold is certainly in a downtrend. Although it did bounce off of its low today where it opened, we're still in a down cycle on gold, and it certainly is trading somewhere in this range. but basically going nowhere fast. So those are our sectors and those are our indexes that have taken place during the first 4 days of the week. Friday with PPI and with the consumer sentiment could certainly provide for us some excitement as we go into the weekend, and we'll see whether the traders want to hold for the weekend or whether we're going to sell off a bit going into the close tomorrow. Today, with our pullback and then the bounce in the market, we see we did it at basically right around average volume. No big commitment out of the market today, as we got what looks like a spinning top on our candlestick on the spider, and we see that we are definitely in a down cycle waiting for our next bounce, which more than likely we're going to get sooner or later. It's just a matter of when, and when it does, there could potentially be certain stocks that you might want to take advantage of for a swing trade as the market starts heading back up. Some of those stocks are on this list that we're looking at, and we'll actually look at some of the charts for those of you that are gold members. We'll look at some of these charts and we'll see which ones might provide for us some opportunities as the market sooner or later is going to begin that rebound. For the rest of you, it was a pleasure having you here on Options University. This is Butch Shorak. It's Friday the 13th of July, and thank you for being here. To our gold members, welcome back to Options University, and let's take a look at the week that was, at some of our other charts. We see that we have settled tonight, actually this morning, at 1334.76, right around that support level that we predicted. Now we'll see whether or not we're headed lower. We actually have a support level down here on the diagonal line, which is at about 1312, 1313. We have the 200-day moving average sitting somewhere below 1310. And so those are the two next targets if we should head lower. And we see that if we look at the candlestick for Thursday, we see that it did have a nice rebound for the day, but nonetheless we continue in our downward cycle. So therefore the cycle is still down. So those of you that enjoy pulling some theta out of the market, watch that first half hour tomorrow and see whether we're trading above that level or below that. You could also, if you want to be a little more conservative, wait till after the first hour, and then you may want to set up some short-term swing trades based upon whether we're headed further down or whether we're going to get that bounce. We can tell the difference based upon a higher high or a lower low, and trade in the direction of the trend certainly is one of the ways that you can handle trading this kind of a situation. So Friday will be interesting to see what it does after the news announcements from the PPI and from consumer sentiment. Looking at Amazon for the week, we see as we look at the 4 days, looks very much like the overall market. Now here's what's interesting. Notice that we had a nice little move above its trading range. It didn't pull back all that far. So if you start seeing a higher high and higher low, you certainly have potential for a swing trade here, looking at this thing climb higher and higher, and it will follow the overall market. Showed good relative strength to the overall market, and we've got earnings coming up on this on July 26th, so keep that in mind when you consider the length of the trade that you're going to be in, as holding through earnings can be rather hazardous. Taking a look at our next stock, we're taking a look at everybody's favorite, Apple, and we see that during the 4 days this week as the market was headed down, this certainly showed some relative strength as it's heading into its earnings on 7/24. So we're basically about 12 days away from that earnings date and looking for an earnings run out of Apple going into that earnings. So if we see a higher high, higher low, we may look for higher highs on this and than we previously had running into earnings, which many times Apple will do. So watch for that buy signal and then take advantage of it with some kind of bullish strategy to help pull some money out of Apple, as it could certainly set up for an earnings run here at this point. AutoZone had quite a day today as it just bounced up about 3.66%, up 13 points for the day. And we see that as the market pulled back, AutoZone's been going exactly the same way. And so certainly some potential with a turnaround in the market. This thing could definitely head higher. All right, after looking at AutoZone, next let's take a look at CMG, and we see that it has gone absolutely nowhere, showing relative weakness in this overall market. Earnings coming up on 7/17, which is like just about a week away, and so showing no strength going into earnings whatsoever, as this thing is just trading sideways going into earnings this time. Not showing the strength that it showed all last year, well, from October on last year, and certainly in the first 2 quarters of this year. CMG looking as a bit of a laggard as it's trading sideways going into earnings. Looking next at Google, which earnings are on July 19th, we see that it's followed the overall market, showed some weakness in this overall market as we trended down the last 4 days, and so did Google. Looking for some kind of a bounce here. Look for that higher high, higher low. We may see some kind of move out of Google, as earnings on this one are less than a week away on July 19th. So keep that in mind on the length of your trades. Remember, earnings always provide, those earnings dates and announcements always provide an added risk for the market, but then also will add in some volatility. So for those of you that want to take advantage of theta and take care of volatility, these are the stocks that certainly give you that opportunity to do so. ISRG, we see that has pulled back, certainly showed greater relative strength to the overall market, and we see that it has been in a down cycle the last 4 days, looking to try to move higher. Certainly went low enough today, and look for that higher high, higher low. If the market does head up, ISRG is another one of those stocks that will head up with the overall market. At least it has in the past. Looks almost like, oh, it is the same chart. As MasterCard chart is not up here, that's the ISRG chart. Take a look at the MasterCard chart and see what you see there, as it certainly has been an interesting stock. Now here's a big surprise. McDonald's with a big move up today, up to almost 3%, certainly over 2.5%, as McDonald's moved up and finished strong for the day. Look for a continuation of this, as we see that was done on large volume. That's certainly a bullish move in today's market. Earnings on this one are 7/23, and we may be having some sort of an earnings run getting started on McDonald's, as it showed big old candlestick with big old volume. That's the kind of news that can play out and continue on up. So certainly look for that higher high tomorrow on McDonald's, as it provides a possible buy signal. Looking at Nike, we see that it's gone no place, and it seems to be going there fast, trading in a very tight zone. Market traded down in a down cycle. This went sideways, just had earnings, obviously not too impressed by those earnings. So Nike not showing us much, and it's just not doing it. All right, now let's take a look at Priceline. Coming up on earnings, it isn't until August 2nd, and as we look at those earnings coming up, it did follow the overall market, trading in the basically around the middle of its trading range. Did have that little head fake, or whatever that is, we're going to call that took place in the overall market. So if we see the market pull up, we could see Priceline pull up, as it's still a couple weeks away from earnings, has been well known to have big earnings runs, so you might be able to take advantage of a bullish trade on Priceline if the market will reverse here. That's the big if. Is the market going to reverse tomorrow? Watch that SPX and see what the SPX does, and it'll give you an idea on these stocks, which will, many of them will move in tandem with the SPX. WW Grainger had quite an update today, as it opened low and then popped up, and we see that it had a big move from 177 to 185, basically about 6 points. So that's a big move out of WW Grainger on volume. And so another one, if the market moves, we could see this thing move higher, looking for higher highs and higher lows, trading within its trading range, but it did not want to trade that low for very long as it jumped up quite high. Earnings coming on 7/18, so we're basically around 5-6 days away. So any trade here would have to be a short trade with us getting out before earnings, as there's certainly, let me reiterate, huge danger on holding through earnings because we never know what they're going to say. So with that thought, that's our stocks to watch, our horsemen, the ones that actually will follow the market, and we can take advantage of these short-term 3 to 5 to 7 day swing trades on these stocks along with the indices. And so that's it for Friday, July 13th. This is Butch Shorak, Options University. Trade what you see, not what you think, and watch wisely.